bearish trend that took place in the just concluded trading summary, despite the complete 5-day trading activity. First off, good morning, gentlemen, and welcome.
Good morning. Good morning.
Okay, simultaneous greeting.
I think I would say,
okay,
let's push the questions more.
Okay,
Mr.
Fola, right?
Yes, I want him to expose our listeners to what is happening in the markets.
Precisely.
And also for all the listeners to know what investment is all about.
Beautiful.
Because he's an expert in that area.
Okay.
And it would be nice and better for all the listeners to know where to invest,
how to invest, okay,
when to do all that in the market space.
Okay.
So more questions will be tilted towards him.
No, you're certainly
all right, my honorable sidekick has spoken, so let it be. All right, so if you're listening, this is the Mainland Business Cafe, currently on your airwaves. 98.3 Mainland FM is the dial. And of course, this morning, what we're going to be looking at is, once again, leveraging on alternative products in the capital market. So as the program progresses, of course, we'll entertain calls from our beautiful people who are tuning this very moment. First off, let's go over to Mr. Folagbade Adeyemi. Good morning, sir.
Good morning.
Thank you for joining us. And we're hoping that you'll be a regular on the program.
If you invite me, I'll try and make sure I come.
All right, beautiful. In addendum to that, we're currently streaming on Facebook and YouTube at Mainland 98.3 FM. You can join the conversation when we get to the section or the segment of the Q&A session. All right, so first off, let's quickly talk about leveraging on alternative products in the capital market. First off, what alternative product would you prefer, or would you propose to a listener or anybody who is interested?
Okay, so alternative assets in the financial sense, just by way of giving people like an introduction into the topic, is more or less assets that are the non-conventional type. These are not your stocks, not your bonds, the things that your brokers would typically be advising you to get into. But they are very much viable investments. They are investments that, more likely than not, most people on average would not have access to. Just because it's either a well-structured product. When I say structured, typically structured products are not things that are available and out there in the markets like that. Secondly, it's also because they typically would be pretty expensive or pretty high investment threshold for you to even get access to having a conversation about it. So it's almost like a screen. Most of the time, it's the cream of the crop, or the top 1% of your population that typically will be looking at alternative assets, because it's almost like a pyramid, right? So the investment pyramid is such that you have the low-end investment options, which would be your cash, your ajo, all those type of things. Then you go into your bond, your stocks, your bonds, and then as you go up, you then start having them to be a little more technical, like your funds, your mutual funds, different type of funds, ETFs. Then you start talking about fixed, other type of structured products, and that's where alternative assets are. So people typically have to climb up a pyramid in terms of earnings before they then start getting access to these products. But by virtue of what they are just investments in things like real estate, things like private equity investments. When I say private equity, that basically means maybe someone is trying to start up a business, and you're going to use that person's going to be looking at sufficient capital. But in most cases, what people do prior to this whole fintech race that we've seen, is that most people go to family and friends and raise. So inadvertently, some people are doing it, whether you like it or not, depending on what scale. Maybe I'm a tailor, so you're
artisans
probably
and the
doing those
rest.
type of things, but the problem is it's not structured for you to be able to do that sufficiently. But alternative assets are there. But the question really is it being structured appropriately? Is it being monitored appropriately? Is there regulation that's guiding things to ensure that the people that wouldn't be in that 1% bracket can actively get in, be able to get the rewards and not be burned by sharp practices? So, and that's really what Split Exchange, which is a product that we're building and coming to the market is all about. It's all about democratizing access, using technology which allow people to get access to various type of asset classes, specifically even real estate. So you don't have to be in the top 1%. As a matter of fact, you can be the person to go and buy one subplot of banana.
Wow. Here's hoping.
That's if I'm doing my job well. That's what I should be able to bring to the table for you and everybody else, and then be able to reap the benefits of having that subplot in that specific space. Or like Mr. Adiaga is also going to allude to that. We're just talking about downstairs. Entertainment and media, being able to invest in music assets, music properties, movies.
I think I'm interested in that.
I'm sure you would be. It's actually a very interesting topic, and it's one of the things, if the last couple of meetings I've been with it, it's always like I'm talking about Nollywood and all these other type of other type. But it's a viable investment product. The issue has always been whether it's structured well enough, whether it's regulated well enough, and I think that split exchange is bringing the answer to that question for people generally speaking.
Wow.
You can see that.
Very introductory, very to the point, very precise and concise.
When I said he's an expert in that area, you can see.
No, you're just watching.
So.
Wow.
He's been in the market for a very long time. He had packaged some products in various organizations that he worked with, and so I tapped into his knowledge and wealth of experience. I just want him to talk more about all that. So, having said that, it then goes to let the listening audience know that they have an option. And the options, like he mentioned, are going to be more beneficiary to them as against the usual, in quotes, stocks that they are used to. Anybody you ask about stock, they can offhand tell you what they think or know about stocks. But they are not too deep. And for the product that they are trying to sell, that is trying to bring up, is such that will add value to your streams of income.
Beautiful.
So listeners should take advantage of
this,
his presence here now. Otherwise, when the thing comes on stream, it may be difficult for them to get it to buy. Because in as much as the prices may be down or low now, before you know it, because there are some high caliber of investors who are already waiting. So they take advantage of it because they have a pre-knowledge of what is going to be, what that thing is going to be. And so they take advantage of it, and then they tap into it. So for every listeners who want to invest, this is an opportunity for them to know how to go about it.
All right. Thank you very much, Mr. Kenny Adiaga. All right, so you've heard it from the horse's mouth. Once again, this is the Mainland Business Cafe, currently on your airwaves, 98.3 Mainland FM. The sound of Lagos is the dial. Of course, two delectable gentlemen are in the studio this morning in the presence of Mr. Kenny Adiaga, our very own financial analyst, and Mr. Folagbade Adeyemi, who happens to be the managing director of Splitter Holdings Limited. And this morning, we are looking at something very, very important, and very important too, at the capital market structure, which is leveraging on alternative products in the capital market. Now, speaking of which, I was reading an article in the business section of Vanguard, and of course, I'd just like to, you spoke on the theme, which was last month, in the month of March 28th, to be more specific, beyond tradition, that is increasing relevance in alternative assets in capital market. And you lamented on the absence of robust funding pillars, in the country. So I want to believe that split exchange will solve that particular issue and possibly provide a more viable means of funding to support some projects that we want to undertake here in the country. So do you want to expatiate on that, sir?
Oh, definitely. And I think I'll do a little bit of context setting, just so that people understand
precisely
the nature of opportunities that we see, which is one of the reasons why we are coming up with this product as of now. And I always go to the topic I love to talk about the most, which is entertainment and media. Right now, I think based on reports that we did as we started originating this idea, one of the things we saw was that Nigeria has the highest compounded annual growth rate in terms of entertainment and media growth. Highest worldwide. And it's just because, and you can see it just by, even if you're just scrolling through your social media feed or even just driving along anywhere, everybody wants to be in entertainment and media in one form, whether be it a content provider or a musician or Nollywood or part of that, just that Nollywood value chain. One, we are all seeing that there is activity in there, and it's activity that has grown in spite of the lack of funding, structured funding, either from the banking sector, the capital market, or even just the government side of the fence. There's that growth that's just there. The challenge has always been historically that, one, regulation, two, piracy. Piracy, if anything, I think had been the major concern for most people. Because if you're able to put in, let's say, 10 million or 100 million, how assured are you that you'll be able to get your 100 million back in capital and returns without having to worry about somebody maybe going, when we're still doing CDs? I'm sure you know those funny names and CDs that we used to see in the streets. Exactly. So that's someone just putting out your music and material out there. That's a loss of revenue that could have come to that business that was originating that asset. So now that we've seen that there's I'm looking for there's a mixture of everything moving in the right direction. Technologies in the form of being able to just create applications, apps now, and just launch them without from your home. Two, internet being more cheaper by the day and being more accessible by the day. Three, even the strength of the internet is even changing from 4G to 5G, which means what you can do is easier. You can stream more easily. Now you have streamers and digital platforms, Spotify, YouTube, Netflix, Prime, all these people that are, I'm saying their names, I'm not praying for advertising. But ultimately, it's these platforms are channels through which revenue for all these businesses and all these people that we've seen are assuring themselves of revenue. And what is effectively happening is everybody's seeing that value creation and pouring into it. The challenge, the fundamental or the traditional finance space has is that there is no structure. There's no structure. How can you easily go in and be assured of your business and being able to get out easily and exit? And that's one of the reasons why I believe traditional finance has stayed away. But the work we're doing and the exchange that we're providing one is going to provide the required structure that most people would require and have that confidence. So in creating the structure, in creating the enabling environment, in creating regulation and working with regulators to make sure that those regulatory guidelines are in place so that people can be taken care of. The retail and the lower end people are always never going to be shafted. Ultimately, what should then happen, what should follow, is that capital will then ultimately deploy into this platform and this space. And then the growth that was just entertainment and media space alone. And the next, imagine that turns to 10, 15, 20. And for sake of comparables, the next person...
I'm so sorry, we may have to interject. Once again, this is the Mainland Business Cafe on 98.3 Mainland FM, the sound of Lagos. Please stay tuned, do not go anywhere. We'll be right back shortly. Headline news on 98.3 Mainland FM.
Good morning. Headline news on Mainland FM. My name is Sage Babalola. President Tinubu opened Africa Counter-Terrorism Summit today. Motorists, residents stranded as flood overruns Lagos-Ogun roadways. Governor Aiyedatiwa declared winner of Ondo APC primary election. In business, FBN Holdings appoint Olusegun Alebiosu as acting CEO of First Bank. Marketers eye 700 Naira per litre diesel after Dangote price cut. On the foreign scene, Dubai airport chaos as UAE and Oman reel from deadly storm. UK Prime Minister Sunak says Rwanda asylum policy to proceed despite parliamentary deadlock. In sport, 𝗪𝗪𝗁𝗄 Bellingham strikes again as Real Madrid come back twice to beat Barcelona. That is the headline news on Mainland FM. Details at noon.
right, thank you for standing by. Still the Mainland Business Cafe on your airwaves, 98.3 Mainland FM, the sound of Lagos. In addendum to that, we're streaming live on Facebook and YouTube, respectively, at Mainland 98.3 FM, our respective handles for the two social media platforms, so you can join the conversation, which once again is leveraging on alternative products in the capital market. Of course, two distinguished gentlemen here are in the studios in the persons of Mr. Kenny Adiaga, who happens to be a financial analyst, and Mr. Folagbade Adeyemi, who happens to be the managing director of Splitter Holdings Limited this morning. All right, so let's continue the conversation, sir. So over to you. We're talking about the fact that the exchange, split exchange, would provide a robust funding pillar in the country and possibly deploy some sort of funding to projects that we want to undertake here in the country. So please go on, sir.
So I think, I mean, just to clarify, we believe that by, again, this product that we're launching, we believe it will ultimately provide an avenue for anyone who has thought of, and this is almost from an institutional or personal perspective, has thought of investing in these type of projects and assets, whether it's music, artwork, movies, property, and any other type of alternative assets. We can easily then provide a destination that everybody would then convene and say, you know what, I have this asset, do you want it? I need to exit. It's ultimately becoming the new exchange that everybody would then be looking towards, because it's for me, again, it's almost like the beginnings of a conversation around alternative assets and an establishment of a new exchange that would then provide interest, portfolio interest in the form of asset managers, institutional investors, as well as maybe even then one day, if our RSA, when I say with RSA, I'm talking about our PFAs,
yes,
also deem it fit to then channel a little bit more of our savings, our national savings, into that, because I believe it's actually worth it. Looking at the size of growth that we see over the next couple of years, it only makes sense that as Nigeria tries to then make that leapfrog in terms of where it is currently to a higher level of growth nationally, it then needs to be looking at, not ignore that. That's a massive, has always been, how do we create that structure? And I think split
off air
is the regulator that you talked about. Are our regulators ready for this new era, where products are kind of initiated and they can manage it? Because if you introduce an idea and the regulators are not in tune with that idea,
yes,
it's going to be a failure.
I understand.
Already.
Sort of like when the FX reformation that took place a couple of months ago and back and forth. Yes,
You know, so let's hear you.
So for me, again, my regulator is always going to be my regulator. I'm always going to be rooting for them, because the truth is, whether I like it or not, there's no development that can happen without that major stakeholder just keying it. One of the things that's just required is lobbying and engagement, and just, you know, providing that avenue for them to see the benefits that would ultimately exist. I don't see a situation where any regulator who's sufficiently educated and is sufficiently enlightened about potentials to a new market that is coming up would then say no. Because the truth is, the mandate is one, growth, but growth with rail guards. And I think it will always be, what are the rail guards that need to be in place to ensure that everybody is safe and secure in their investments? And I think that would always be the conversation we are willing to champion with the regulator to ensure that makes it happen. So it will never be one thing that, it would never be a situation whereby you can originate and carry the regulator along. One would just have to continue doing the good work of engagement and development and enlightenment with them.
Okay. I take it that suffices, right?
Yes.
Okay, fantastic. All right, once again, this is the Mainland Business Cafe on 98.3 Mainland FM, the sound of Lagos. Currently on your airwaves, what we're talking about this morning is leveraging on alternative products in the capital market. Aside your usual stocks, bonds, equities, the MD of Split Holdings Limited is here to school us on some other alternative methods that you might want to incorporate to get some sort of investment. So let's move on very quickly now. Based on the just concluded theme held last month, now what is the stage of split exchange?
Okay.
Now it was still in its developmental stage, and that's like a month ago and counting.
Yeah.
So what is its current stage now?
Okay, so before I do that, because I also realize, having poured through a lot of the things I've been saying,
Okay.
I still need to maybe just educate a little bit more about
Okay.
what it does.
Beautiful.
So just for the sake of everybody listening.
Yeah.
Okay. So Split Exchange is an avenue, is a platform in which we securitize. What I say securitize is that it affords a user, an investor, the opportunity to buy a unit or an ownership interest in an asset, right?
Okay.
That asset could be music, it could be movies, it could be artwork,
Okay.
it could also be property. So ultimately,
Okay.
what we're
Real
just doing-
estate. Okay.
yeah, real estate.
All right.
So all we're basically doing is taking one major asset, whether it is physical, real world,
Okay.
or non-physical, in this
Non-physical.
case IP, intellectual property, and then just creating units of ownership around it and allowing people to buy into those units of ownership. Not only will they be able to buy into it, then they can then exchange and freely exchange it between themselves on an organized platform. So that is
Okay.
ultimately what Split Exchange is. I needed to set the context
Okay.
there
Yes.
because it then gives you a pretty good idea of how much work we have
Been
had
done.
to do and
Okay.
we're doing.
Okay.
So in terms of where we are currently, we're currently actually in the stores as of today. You can actually download the app today
Okay.
in your app store or Play Store, and you can then sign up. What we're doing continuously as of today is we're doing regulatory engagement. We're going through a process of regulatory development and endorsement so that we then get all the necessary endorsements from the regulator to ensure that there is no concern around its implementation in its current form.
Okay.
And then to more or less say, fingers in,
Thumbs up.
thumbs up, ready to go.
Okay.
This is the new exchange.
All right.
Everybody, and then we'll then fully be in the market as it is. So what we're doing right now is, one, we're refining the product. The product is
Okay.
already out there. We're refining the product from a regulatory standpoint. We're also then using this opportunity to engage a lot of institutional investors, institutional users, and in some cases retail users.
Retail users. Okay.
So I say, you can onboard on this, take a look at what we're doing, buy into some of these things, use it, give us feedback. If there's any need for change and updates, we will use that as a market-led approach to refining the product, improving it such that as the time comes when we are now going to go nuclear, it will be with the best experience anybody has ever had.
Okay.
Yeah.
And you'll get your possible ratings.
And awesome.
Definitely.
Yes, definitely.
Wow.
Yeah.
Thank you so much. I mean, I just how will I put it now? 20 more minutes, and it's like as if we spent 1 hour or something. All right, so Mr. Kennedy, I don't know if you have any more questions before we move over to the next segment.
The area I want to look at also now is the area of this recapitalization of a thing.
YouTube. In fact, I was going to that.
How is
Yeah.
this going to play out with this new idea that you are proposing or you are pushing out?
Okay, so where I have to just clarify that alternative assets will never be a full replacement for conventional assets. They are meant to be complementary.
Complementary.
They're meant to be
Okay.
complementary,
All right.
such that in the event you're buying your conventional stocks and bonds and whatever, you don't
Okay.
then get over concentrated in one.
Okay.
You can then diversify your risk into another space, which is now going to be the alternative asset space. That way, instead of your portfolio going up and down and minus 80%, 100%, you at least have that buffer of the option with the alternative asset space, which is what we're building. So it is meant to be complementary. And as we are having this conversation about recapitalization and banks and whatnot, the truth is, I do believe that it's going to be best for generally great for the economy. It's going to be an avenue through which capital, even though it's going to be short, I wouldn't say capital, let's just say funding. Right? Short-term funding is immediately available. Even if it's working capital, it's immediately available to anybody. Right? So for us, it becomes a significant avenue for growth. So anybody that expects that we come out of this capitalization journey, right?
Okay.
Without it impacting the real world, it's going to be kidding themselves. It's going to have a real world impact. People should be able to have easier access to funding. People should be able to even go out there, for instance, that want to acquire assets and list them on our platform. It then has a cascading effect. You can then acquire assets, like if it's property, and you say, you know what, I want to list it on this exchange, and then take a full advantage of it. It then becomes an avenue for it to get a movie done.
Okay.
At a valuation, hopefully that'll be 2 or 3 times multiple of the initial value that they used to raise the funding, and ultimately then it becomes, like I said, complementary. As they're raising here, you're exiting here. You're using that to as you're raising in traditional, you're exiting an auto, and ultimately capital cannot be raised in isolation. If it's raised in isolation, it has to still flow within the economy. And so as the capitalization is going on, we expect that everybody is going to have some.
As a capital last years, think this capital that we'll be raising will stretch them to now investors.
For instance, there'll be some restructuring that capital going to be fully successful. And if it is, how do we then an avenue to trigger growth? At that point in time, we had started our PFA scheme. Structured up. The conversation now is we've had about how many years of about, let's say, 20 plus years.
Yes, 20 plus.
That experience.
Yes.
We are more the question being from outside the country, which I'm sure each person in the boardroom is going to be saying, I'm not sure I want to be diluted in my shareholding. So it's really how to then sit down and structure that capital pots and that allocation in a way that they can use it. But more importantly, I think the last question is sufficient returns for the shareholders. How that money or capital is going to be deployed to generate value for the shareholders.
Precisely.
And I think those are the questions that each person will be asking, whether it's going to be to expand operations, to expand lending, or to question with NB, where is the arc of growth that each bank wants to go? What trajectory do they want to pursue? Is it going to be trade and investments? Is it going to be general growth in terms of geographical or global expansion? So it's a question that needs to be happening right now, and I think the strategy teams within all these companies will be doing looking to answer those questions. I don't have the answer to them.
I understand. All these things. Just hoping. Anyway. Okay, so let's go over to Mr. Kenny Afiaga, because I know he's bursting with ideas. Okay, so I don't know if I should make $1 million.
I do know that they can raise that amount of money. They have a pedigree that will help them to raise that money. For them to have anticipated that volume, they must have done some homework. Huge amount of money to be raised. So they would have done a whole lot of homework with their current shareholders, with their major shareholders, to know that they can raise this money. And that is why they are confident about it. More so, they are a tier 1 bank. And so is give the needed even with their own work, with everything, and they don't have information out there for investors to take home, believe in them. You know, banking is a thing of trust. Now, in the past, you could do anything, but now, every investor, every banker, or everybody, shareholder, they are enlightened. They know what it is. So you cannot bamboozle them with anything. So you must be able to convince them about things that you are doing. And they have gone a whole lot of they have done a whole lot of again from shareholders, because of more so that they have taken advantage of the IT to blow. I'm sure.
Wow, amazing. do you have anything you want to respond?
I think anybody that's making any kind of just for news became clear around raising capital on a tier 2 that isn't ready or hasn't had this conversation 9 months before, 6 months before now. I suspect that you were really not caught off guard. So most people probably would be at the point whereby the conversations around raising capital have already been front-loaded. They've already structured themselves ahead, and they were just waiting for the word go.
Go.
And I think obviously they just hit the gun had been fired. It's now been fired. Everybody is now executing. I don't think anybody that is at the point of trying to structure and starting to just do things and design,
it's too late.
It's already late.
Yes, I was going to say
that. All the money would have been raised,
exactly,
and you will not be able to get anything out there. So I believe everybody that is in that space already should be ready and had probably been prepared. It's now a matter of just ensuring that it's supposed to happen. Yeah, because I expect that that's what's happening.
I said it before.
Yes, you said it last week and 2 weeks before.
It's not ready. You just know that they are going to play locally, and even playing locally
has its downside.
Exactly, because the local people too are, they are more
enlightened. Exactly.
So if you come to tell them this is your capital base, and they look at your structure and they are not comfortable with it, you're on your own. It means it's just going to be a matter of time that the bank will go distressed. Of course, the regulator don't want any bank to be distressed.
Okay.
And that's the reason why they have pegged it to say this bank, this type of bank will raise this, and this type of bank will raise this. So it is better you know where you belong. And that's why you see some who already knew that they don't belong to that high level. They are playing locally. They already know they have the funds. And so I expect that they shouldn't go above that, because the moment they try to go above that, which they have raised, is going to affect them, and the regulator will come on them. Let them not think that the regulator will just sit and say, oh, they just want to be part of it. No.
And I mean, just to add to that, I think the conversations for people that are unable to meet that tough threshold will be around mergers and acquisitions as well.
I was going to say that.
Yeah, so
case in point, the bank I didn't want to mention, case in point, because in 2017, I remember that was when their first merger and acquisition, or rather, is it first or second? Correct me if I'm wrong. Second mergers and acquisition took place. In addendum to that, on March 29, the CBN had already directed commercial banks in Nigeria with international authorization to shore up their capital base to 500 billion naira and national bank to 200 billion naira. But this time this bank is saying $300 million. So I don't know, the equivalent should be more than that.
No, but I said it.
Yes.
In past
editions, yes.
That they don't even need to be told.
Okay.
The reason why is the kind of business they do. For instance, if you are a bank to play in that field, otherwise somebody comes to want to construct a road and they want to raise that money, switch to another bank, and the moment that bank is able to raise it for them, it means you have lost a client.
Wow. You're not going to play with the big boys. Exactly, dog world. These two amazing gentlemen, the presence of Mr. Kenny Adiaga, our very own financial analyst, and we will soon do a swearing-in ceremony to Mr. Adiaga to also be our financial analyst as well in the studios of 98.3 Mainland FM, rate 2, the Naira. Keep it locked on 98.3 Mainland FM. We'll be right back shortly.
From the trading floors of the Nigerian exchange to the financial analysis of the forex market, we keep you updated with concise happenings from the business scene and how it affects every other sector of the economy. On the Mainland Business Cafe, we also look at trending business stories making rounds while having objective conversations with notable financial analysts. Join 𝗪𝗫opia every Monday at 11 a.m. on 98.3 Mainland FM, the sound of Lagos. The Mainland Business Cafe, your sure guide to the world of business. This is the Mainland Business Cafe, your sure guide to the world of business.
All right, it is still Mainland Business Cafe on 98.3 Mainland FM, the sound of Lagos. Before we close this morning's edition, I'd just like to give an update on the just concluded trading summary for last Friday, the 19th of August, and 20 losers. FT and cocoa processors led the gainers with a 9.6% share price appreciation closing at 1 Naira 37 kobo per share. Oil exchange with a positive of 8.06%. On the losing side, Unity Bank came out last with an end-of-day price depreciation. Tantalizer to 10th. United Bank for Africa recorded the highest volume of 38.7. Zenith Bank with 24.4 million. Now moving over to the FX update, that is in international currency rates to the Naira. What we have here, the US traded at 1,180 Naira when black market closed last Friday, April 19th, 2024. Now this makes it a negative of 11.79% decline for the United States dollar to the Naira this week. That is all we can take on Mainland Business Cafe on 98.3 Mainland FM, the sound. My name once again is 𝗪𝗼. Up next is the global news at 12 noon. Have a fantastic day ahead and bye for now.
When the airwaves in your market become more and more crowded, it's time to break it open.